Bitcoin, we got to talk about Pudgy Penguins today. We're going to talk about some different price levels, some support levels that I'm seeing here, and we're also going to talk about when this should happen. Anyways, remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into it. So we are currently up 2.6% in the last 24 hours on Pudgy Penguins. We are still down though. So we're still down 8.6% in the last 7 days. 30% in the last 14, 44% in the last 30. But, we're still doing good in Pudgy Penguins. The volume is around 164 billion, or 164 million, 1.3 billion inside of market cap here. So Pudgy Penguins is still doing decent. Guys, we're still doing the same thing. I did want to mention a few things here, though. The first thing here is if we look at Bitcoin, if Bitcoin does not pull back and complete the full 32% drop all the way down to 85K, then what we can expect is for Pudgy Penguins to also not pull back, right? If Bitcoin doesn't pull back to 85K, then what we are eyeing is for Pudgy Penguins to not come all the way down here to 0.008 or 0.005. So you got to remember that. Now, as you can see, this looks very similar to Bitcoin right now. If you look at that, and then you look over here at Bitcoin, they look very similar, right? So if Bitcoin doesn't pull back here to 85K, then we won't see Pudgy Penguins do this to 0.008, and then we can see the recovery from here. But still, I'm still personally believing that we are going to pull back inside of Bitcoin as well as Pudgy Penguins and the whole overall market. For one, the MACD is not slowing down right here. It is not slowing down with all that selling volume. It almost looks similar to what it did back here. And that was a pretty big drop. That was the initial drop that scared everybody, right? That was a drop that scared everyone. That was this right here. Well, no, really that started here. That is what started the whole thing. And yes, there are uptrends in between. So if you look at it, we might do something like this and people might get bear trapped. Okay? People might get bear trapped. You do not get bear trapped, guys. Pay attention to these levels that I'm going to give you out here today. So first of all, we also have the percent R trend exhaustion. The percent R trend exhaustion is still breaking down on the daily chart. So it's still pulling back for Pudgy Penguins. And it's still probably doing the same thing here on Bitcoin. Yeah. On Bitcoin, it looks like it's almost finished a little bit. But then we still have massive selling pressure on the daily chart for Bitcoin on the daily, on the MACD. And then we can come over here. Let's go back to Pudgy Penguins, actually. And then let's look at the 4-hour chart on Pudgy Penguins. Now you can kind of see it's trying to recover here. But look at how it almost looks like it wants to already reject there. I don't know. It might or might not. So there could be a breakout from here. But remember, they always work inside of patterns. When you're trading, you're always working within patterns, right? So I can already see something forming up here. And this is how they trap people. This is how these bear traps work. So if we're looking at it like this, there's a possibility that we're seeing something that could be, a pump. So if we keep going through it the way that we are, you can see it coming up here to the top, possibly maybe being rejected down here and then breaking down to like 1.7 or something, or doing something like this and then breaking out. So there's still that possibility. So I just kind of want to show a few other things also. All right, guys. So remember when I said there's also a possibility that we do not see Pudgy Penguins do what we want it to do, right? There is a possibility that we do not see Pudgy Penguins go all the way down to 0.00 or 0.015. And that's okay. Remember, we have a range here, right? We are looking for a range anywhere from 0.005 down here all the way up to 0.015. That's generally a good buy range. But look, we don't know yet if this is a rising wedge, right? Because typically a rising wedge is a bullish pattern, especially if we come into it from an uptrend. But we're coming into this from a downtrend, which could be the small case where this rising wedge is actually not bullish. Because if you look at the real success rate for a falling wedge coming directly from TradingView, it says bullish exit. In 82% of cases, the exit from the falling wedge is upward. making it one of the most reliable patterns for anticipating a positive reversal. But if we come into it from a downtrend, that 20% chance that we have, really not 20%, but that 18% chance that we have for it to continue to break down could more than likely happen. We might be of the 18% chance to just continue to break down because we came into it from a downtrend. So there's a possibility that this falling, if this is a falling wedge, right, it's only confirmed once it comes up to here and hits this and then possibly pulls back from there. It's only confirmed when it hits it up there. So if this really is a falling wedge, there's a possibility that it could continue to break down, but there's also the possibility that it can break out. So you have to be wary of that too. And again, I'm pretty stern on my price targets, but not everyone else is going to be stern on the price targets that I set. Like, these are my price targets. Like, I'm willing to wait, and I'm willing to miss buying at 0.02, right? Just so I can possibly buy at 0.015 or 0.008 or 0.005 or 0.013. I'm willing to miss the opportunity to buy at 0.02 and have a massive pump coming all the way up here from 0.02 to possibly even 0.025, because there's a possibility that it does that. Because I think even if it does that, it could easily be a bull trap. It could easily be a bull trap. We could see something like this, right? We could see something that looks like it's about to break out just for another pattern to start forming up. And this is the thing about trading. This is why you start to see my charts start to look messy. It's just a lot of stuff because I'm tracking a lot of different patterns. There's a lot of different patterns going on this one screen. And that's what you got to realize with trading. Like, this could easily become a new pattern right here, a new pattern. I'm already seeing it, because then if we take this and then we really start to go, if you really want to get into it, now we're looking at another channel. Now we're looking at another channel if this happens. And imagine if that happens, guys. That is called, I think this is a expanding wedge or something like that. But anyways, what we are seeing could be that, because we're actually seeing the same exact pattern coming up on Aster. And I just kind of talked about Aster in advance. So we're seeing the same pattern there. So there is a possibility that there's another pattern forming up. So that's another thing that you guys want to watch out for. So if this is true, then even if you see it breaking out, because this is a rising wedge, so we're like 50-50 with it right now. Even if you see it breaking out and getting up to like 0.027, I'm still not buying it, because what if we get rejected right there with Pudgy Penguins and then we continue even further? So we can break out now. We can break out later. I'm staying stern on all of my price targets. I'm staying stern on all of them. This could easily be a false signal, and we could easily get bull trapped. It does look like a falling wedge, but we could easily get bull traps here, guys. We can easily get bull trapped, because yes, let's say it breaks out to the upside and then continues down lower. But you just have to be careful for this stuff. But yeah, there is a possibility. Let's keep watching it. I'm gonna keep you guys updated. I'm still keeping my targets stern here, and really not even 0.015. I want to say anywhere from 0.013, because that's the actual Fibonacci support here, all the way down to 0.005. Like, all of this is a good buy zone. So let me actually create the buy zone here. This is the buy zone. If it comes within this zone right here, this is where we want to be buying at, all in this zone. So I'm going to keep this up here, and let's see if we pull back to that buy zone. But yeah, this is pretty much what I got for you guys today. I also want to go over something else. So you also got to be careful who you're watching, who you're listening to, because sometimes, people aren't given the best of information. And I'm sorry to call this guy out, but I got to do it. So this person says, adding more PENGU to my portfolio at this dip. Current price 0.02, which is good. It's a good price. I'm not going to lie. He said, my thesis is simple. Memes as number one crypto sector right now. Definitely not. Memes is not number one crypto sector. It's one of the lowest, actually, right now. Like, people aren't really looking at memes as much. They're really looking at the perp stuff like Aster and stuff like that. But anyways, new liquidity flow during the next wave. The most powerful DJing community. Not really. Huge support from biggest voices on CT. What I will say is this. he got some of the points right, but he put his support for his Fibonacci at 0.02. The problem I have with this is, what about down here? What about down here? See, he's missing most of the technical analysis. He's missing most of it by not putting his support at the swing low. He's not taking it from the high to the low. Take it from the high to the low of this cycle right now, and that's all the way down here. So you're not getting all of this, right? He's not getting all of this. He's stopping right here at this support. Like he's stopping right here at the bottom of this because he has it all the way up here. He has it all the way up here at 0.02. He's not tracking the whole thing. He's tracking half of the price. So he's only going to get half the results. Like, let me say that again. He's tracking half the price. So he's only going to get half the result. He's not tracking the full price. So it looks like it's at its bottom, but it's really not at its bottom because he did the Fibonacci wrong. You take it from the high down to the low. So this is from the high down to the low. Now look, now all of a sudden we have a whole Fibonacci zone. Like, look at how that, like magic, right? He has no more last zone down here. It looks like it's at the bottom. But now all of a sudden there's a whole nother Fibonacci here. This whole area right here still has to get touched. This whole area still has to get touched. The solid support doesn't come until all the way down here. The solid support doesn't come until we get down there. So this person's missing a lot. They're missing a lot of stuff on here. So hopefully they get it right. But hey, there's nothing much I can do about it. But look at all that. Look at all that down there. Like, this needs to be down here. They're getting half of the picture. They're getting half of it. They're not getting the whole thing. But yeah, this is pretty much all I got for you guys. I just kind of wanted to show this at the end. But anyways, hit the like button and subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Leave a comment in the comment section. Let me know what you guys want me to go over next. Definitely become a member of the channel. It's only $9.99 per month. And I'll go over any crypto or stock that you guys want me to go over, and I'll do a technical analysis for you guys. And you'll probably make your money back within the first month. It's only $9.99, and we'll also start doing some live streams as well for the members only. So shout out to all the members out there. I'm gonna go ahead and close it out here. Shout out to you guys, and remember those price targets that I told you about. And as always, we'll be back with another video.